amazing guests are laughing here because of, hey, you know, we didn't plan to be here for this long, but the two of them seated there, the intensity of the conversation and the wisdom being dropped, it's heavy. I don't want to end that last chapter the way I ended it, and I rushed it a bit because of the card was being filled, and I need to change cards. So I want to go back there and let's close it nicely. There's something that you said, and there's first and foremost, investing and risk go hand in hand, because nobody knows the future.
Yeah.
And also, this thing I hear Rina saying it a lot, and also you, Pius, this guarantee thing that we have, there's no way you can enter this investing thing unless you change your mindset and understand risk is part of this. Guarantee is actually a red flag. If I hear you, Rina, say the word guarantee, can I?
Please run.
Huh?
Run away.
Okay, no, forget Rina. If I hear Faida Investment Bank saying guarantee,
Run.
Run.
Yes.
If I hear Nabo Capital saying guarantee,
In fact, you'll never hear it.
We don't ever use those words. We're professionals, first of all. And our professional ethical standards and code of conduct does not allow us to use that word.
Yeah.
We can't use it.
The only one who can use the word guarantee is a prophet.
and even though there's some shoddy ones.
And I am not a prophet. Neither is Rina.
Okay, Pius, then how would you close this session? I just
So we have agreed. There will be no world of investment without risk. So anytime you engage in investing, you're anticipating the future, which no one knows with certainty except God and a prophet. So, and even the Bible says that the prophet also knows in part. So there's still a part that they don't know. So you need to ask yourself, what if I lose? What if I lose the money? What is the worst thing that can happen? And am I comfortable with that? And that's why we bring the issue of diversification. You say, don't put your eggs in one basket. So make sure you put your money in different pockets, and we'll come to that. So that's why we said again, why is a money market fund safer than a bank account?
because it is diversified.
Is because a money market fund, with one investment, you enter into a diversified portfolio. If you put money in a bank, you put money in that bank. So when that bank collapses, it collapses with your money. So in a diversified money market fund, you will get at least 75% of your money, if at all the fund manager had invested to the maximum.
And in that bank.
In that bank.
So when Chase Bank went down, you didn't lose 100% like the people in the room.
No. Any money market fund that had invested in Chase Bank only lost the portion that was allocated to Chase Bank. But did you hear of any money market fund that collapsed?
No, none collapsed.
None
One or two struggled to
Yes.
pay back, guys, but they did not collapse.
Yeah.
What Pius needs to also add is that allocation is governed by regulation.
By the regulation.
You can't just decide, I want to do a money market fund, I want to give maximum returns. Let me put all my money in this bond that's giving 18.4% and then I relax. You can't do that. There's regulations around which maximum portions that you can allocate to different investments, and they need to be short-term investments. If it is a different fund, there's rules around that.
Yeah. And the thing is, as long as you begin the journey of investing, you must remember it is a journey of, it's a game of return and risk. It's a game of, not just a game of return, it's a game of return and risk. Let me give an analogy. If we are driving to Mombasa and we need to be there in the next 3 hours, we need to drive at maximum speed. With some cars, it's actually possible. You can get there in 3 hours, but you really will be flying. When people see you on the road, you will literally be flying. Now, that's a fantastic thing. But the downside of it is if you hit a pothole,
Go on.
it is over. So when you see a product that is giving you a high return, you need to also ask the question, how fast are we traveling? And that's the question that I have found many people don't ask. You get? Chase Bank was offering the best returns, the best deposit rates in the market.
Almost the best. There was another one that was a little higher. But yes, you're right.
But it was there,
Yeah.
isn't it? And there, check, anything that has collapsed in this market was offering almost the best returns in the market. That's a clear thing. It doesn't mean that it cannot happen. You cannot offer the best returns and be safe. I'm just saying one common characteristic among Ponzi schemes and other products that have caused so much grievances is around the return and their
consistent.
Consistently
high.
Yeah. Now, let me put it this way. If today I'm looking for an investment professional to work in my investment team, one of the questions I ask during the interview is, have you lost money? If you've never lost money, you do not qualify to work in our team.
You're not a risk taker.
Not even that. You don't have experience. Because there is no billionaire who's never lost money. There is no person who has succeeded in the world of investment and has never lost money. We all have our scars and our badges here. But those scars and badges did not kill us. They made us better. And so what did I learn with the collapse of Chase Bank? I learned one thing. When I engaged all the other billionaires who had lost money, that their joy did not come from the money that they had invested, but their joy came from the systems that they had put in place of creating wealth, that even though $1 billion or so was locked in Chase Bank, there was still more cash flow coming. And even if that was the last one, the system, they were so sure about the system that if they apply the same principles, which we are discussing here today, you will still bounce back and make the same money, if not more. In fact, if you look at anybody who has lost money and is a real investor, they tend to succeed far much more than when they lost their money. So what makes money for you is not the money that you invest, it is the systems and the fundamental principles, the pay yourself first, and making sure that your money is managed by professionals. It is those things that really assure us of making money.
So put your confidence not in the money.
Not in the money.
But in the system that you
system that you have put. Because if your system is tight, even when we lost money in Chase Bank, we went back to the system. How did this thing pass through our system? How did it filter through our system? And we tightened our system. We tightened our system. Say, this mistake
it's not going to happen
or
again.
this lesson, we'll never learn it again. So I thought it is important that we mention that. So there are two ways you can lose money. You put money behind people who cannot be trusted with money, and you lose money because of factors that are beyond the control of even experts. Like COVID,
Natural disasters,
natural calamities. Those things will always be at play. Economy, you said economy, those things will always at play. You can lose money because of those things. Now, we as investment professionals, we are comfortable with the risk of those things because we've been trained to manage money in all those seasons. But the basic thing that we should make sure all the people who are listening to us are very keen is to make sure you entrust your money with people who can be trusted with your money.
Pius, I wanted to add on and say, you gave an analogy of, let's say you are to get to Mombasa in 3 hours.
Yes.
A rally driver, that is their job.
Yes.
Do you get what I mean?
Yes.
A rally driver will get there. You trying to keep up with the rally, because they have the car. For that particular time, the road and the clearance has been done for that. Remember we saw the rally.
Conditions are right.
Conditions are right for that.
Yes.
So a rally driver getting to Mombasa in 6 hours, there's a problem. They're driving too slow.
Yep.
So within the money worlds, I
That's
can't
true.
compete with you.
No.
You're the rally driver of this thing.
Yeah.
You know how to, when the rain comes, like right now it was raining, you know how to
Maneuver.
We know how to
maneuver
maneuver.
that.
Yeah.
You are geared to doing that.
Yeah.
You understand the system of doing that.
And that's where the value of the expert comes in. Not in normal conditions. It is in the, when things go crazy that you see, wow, I'm so glad I'm with Rina. I'm so glad because Rina saw it coming. I remember the global financial crisis.
2008,
2008.
2007, 2008.
We had just done our budgets in April, and in the month of May, I sat down with my team and we were looking at the global flow of funds, and we noticed a pattern. Money was leaving. I remember we saw it in America, we saw it in Europe, and then we saw it in Nigeria. And the moment we saw it in Nigeria, we knew it was coming here. We sold everything that we were having in our portfolio. You know, fire sale. In fact, we made some losses. In the month of August, there was 1 week, Nairobi Securities Exchange.
There was a halt.
We lost 100 billion in 5 days.
The country.
In fact, NSE even, there was a halt in the market.
Even there was a halt. You know,
Yeah.
it is a crisis when the
NSE
market
stopped trading. Just
We
said, guys, you need to cool off.
cool off.
Yeah.
But guess what?
You out.
We saw the trend coming, and we knew it was going to touch us, and we exited, and we are now holding cash. When the crisis hit, guess who was looking for us? All the banks. All the banks were looking for us because we
They
were
want
the only
deposits.
one with cash that could move. Everybody else was locked. We made crazy money. Oh, in a difficult season.
I want to actually touch on this before we move on to the next thing. And Rina, this is maybe, I want you to chime in. I had a guy saying, and this one baffled me, that when things are normal, we find it boring, as we like volatility.
Yeah.
Yes, yes.
We make money when
When
things are
things
going
are volatile,
down,
yes,
when
or going
prices
up.
are going up.
Yes.
We love crisis.
The direction doesn't matter.
Are you seeing the difference with you and us?
Yes.
Us as the people who've given you money,
like
we are happy when things are calm.
Yeah. Actually, when things are calm, we don't make money.
We don't make money.
But are you seeing? Are you seeing why professionals need this? I'm trying to show the audience.
Yes.
You guys get excited. Like now Trump, like
Yeah.
American
This was a
election.
fantastic week, by the way. Like I'm just saying, those who have invested with us
Yep.
will make some good money this month
Yes.
Why?
because of volatility.
Yes.
Look at this guy smiling.
And you know why? Do you remember I said that investment is about a sneak preview about the future?
Yeah.
So people took a bet on an US election. So people are making, saying, you know, if Trump comes on board, crypto will do well.
Yeah.
So yesterday, it was record high. I think the Bitcoin went up by more than $5,000 in 1 day. In 1 day. That's crazy money for somebody who had put some serious money. It is money to change lives. It's cash flow.
Okay, let's stop for a few minutes. We're coming back to continue. First of all, foremost, that's Mtito Are we Mtito We're almost arriving. Am I right?
Are we going at 6 hours?
No, it looks like we are. I'm seeing hope to the possibility of. Remember why we're having this conversation, guys. Don't get lost. And if you're joining us here, start from the very beginning. The question that I've consistently asked is, can I make money doing nothing?
Yeah, but I remember there's something we still need to come in the next one. On the where do you put your money that you are paying yourself first?
Okay.
Yes.
Switch off. We're coming back. See you in a bit.